Hello traders, today is the 12th of January 2011 and happy trading to you all. London is now open, more than 2 hours so far. Okay, so we are looking at the historic daily chart of the Euro USD currency pair, the currency pair that usually move in the same direction like the general market, the S&P 500, the Dow Jones, and the major indices. Okay. And if this currency pair, the Euro USD, has begun a very beautiful uptrend in July 2010 now, right here where I'm placing my cursor, okay? So what I will do in this case, I'll put the spotlight there for you. So you see the beginning of the uptrend right there, okay? That's where the uptrend has begun, okay? Breaking out of the consolidation zone with this huge candle here, okay? This is what we are talking about, okay? The first wave is the wave that break out of the consolidation zone, okay? If you want to learn and master the Elliott wave theory, you need to go to www.24elliottwaves.com, www.digit4elliottwaves.com, okay, to learn and master the Elliott wave theory. Then we have the first Elliott wave, which is this one here. What I will do, I will call that for you in black, okay? So this is our first Elliott wave. And then we have the second Elliott wave, okay, from here all the way down to this level here. The second Elliott wave has been divided into the ABC corrective move. So what I will do, I will call the second Elliott wave in red, okay, and it was divided into ABC corrective move, which is the complex Elliott wave, okay. There's nothing complex about the complex Elliott wave. If you want to know more about the complex Elliott wave, you need to go to www.24elliottwaves.com. Complex Elliott wave means that the second waves, okay, the second Elliott wave and the fourth Elliott wave can be divided into three small wave, okay. Repeat, the second Elliott wave and the fourth Elliott wave can be divided into three small waves, okay, so which we call the ABC corrective move, okay. This is the ABC corrective move right there, okay. So this is the ABC corrective move of this second Elliott wave, okay. So it's there for you. After the second Elliott wave, the longest Elliott wave, which is starting right here, okay. This is my favorite wave, okay, a wave that some people call the recognition wave, okay, because it's obvious, it's easy, okay. Right here, the TSDW24 trading system will give you either a double green signal in the uptrend or a triple green signal in order to catch the third Elliott wave, okay. So if you have a knowledge of Elliott wave plus your TSDW24 trading system, you will be able to recognize clearly that this is the third Elliott wave, and you will take advantage of that, okay. So with the Fibonacci projection tool, okay, you will use your Fibonacci projection tool at this point in time, okay, to measure how far the third Elliott wave can go. So what I'm going to do now, I will use my Fibonacci retracement tool to tell me how much profit those who bought it here all the way up here, how much profit they took. And according to my estimation here, they took a 61.8% a profit, okay. So the movement from here to here, okay, the price went down up to 61.8% of the movement from here to here. So this size is 61.8% of this size here, okay. The second Elliott wave in this particular case is not always like this. In this particular case is 61.8% of the first Elliott wave. So the retracement is 61.8%. According to the Elliott wave projection, okay, if the price retrace up to 61.8% Fibonacci retracement level, okay, the target level is 138%. 138% Fibonacci projection zone, around that zone of 138%, okay, Fibonacci projection zone, okay. Some traders will say to you 127%, some will tell you that it's 138% Fibonacci projection zone. all you need to remember is that it's a zone, okay? It's a zone. It's not a price level, okay? So if I do now my Fibonacci projection tool, okay, which I'm going to draw now from where the trend has begun, right here. I'm drawing it to here, first leg, and then I'll bring it down to the second leg, okay, and I'll let it go. And my 138% Fibonacci projection zone, that's where I'm moving my cursor here. So at the end of the second Elliott wave, you will use what we call the Fibonacci projection. First, you will use the Fibonacci retracement to know how much this retracement it is compared to this first Elliott wave. So you want to know how much the second wave has retraced back into the first Elliott wave. So after you have done that, so we have seen that the retracement is 61.8%, and we know that if the price retraces up to 61.8%, the likelihood of the price target is in the zone of 127 and 138% Fibonacci projection zone. What I will do, I will draw one horizontal line in the region of 138% Fibonacci zone, okay, 138%, and I will color that in my favorite color, the yellow, right there. That's the 138. You see how the price came? The third Elliott wave, which is from here. Bear with me, please. Bear with me, please. Okay, the third Elliott wave is this one up to this level here. You see how the price came near that target of 138% Fibonacci projection zone for the third Elliott wave. Okay, the professional will use exactly this tool, and that's what's happened right there. They took their profit. Some will take their profit at 127. That's what myself I will do. I'm not a greedy trader. Okay, I'm a conservative trader, willing to cream the market steadily. Okay, and consistently. Okay, you do not have to be greedy. All you need is to achieve consistent winning trade, taking profit day by day in the market, and protecting your capital. So you do not want to give back your money, okay, or you do not want to be losing. You do not want to take some ridiculous trade. You want to take a trade that is worthy being taken. Protecting your trading capital is a strategy. It's like a rugby match, okay, or American football. You take the ball, you want to keep it, okay. You don't want your opponent to take it from you, and you run fast with the ball. That's why we do it. So when we see where we take our profit, we keep it. We want to keep our profit. That's why we're protecting the ball, like in American football or in the rugby, okay, and we run with it, okay. That's what we are doing in trading. The same strategy, American football or rugby, perfectly will illustrate trading, okay. So anytime you are about to take profit for the market, remember that there are some opponents behind that are doing something opposite to what you want to do. So when you are selling, there are other people that are buying, okay, and when you are buying, there are other people that are selling. But the idea is that thinking of rugby game or American football game is to keep the ball and to run fast with the ball, which is your profit, okay. Some traders can perfectly trade, but they do not understand that trading is the competition, and they don't have a plan in place. They don't have a strategy in place. They don't have any money management in place, and they get into trouble, and they go round, and they get frustrated because they know in their heart, in their mind, that they can trade, but they are not enjoying their trade, okay, because of those little mistakes. If you become a TSTW24 trader, we will guide you what we are trying to do. The tool that we use, TSTW24, lay down the rules, why you need to follow, why you need to look for, how you do it. So you do not try to look for another trading system. You just stick to it, doing it progressively till you master it steadily, okay. Like learning to drive, same thing. Like learning to pilot, the same thing you do. You do not just start and dump it, okay, and start something new, okay. You have to keep your perseverance, okay, consistent. So you're persevering consistently, okay, moving forward. So the third Elliott wave has hit the target right here in the region of 138% and 127% Fibonacci, okay, a projection zone, and they took profit. And then I will color my the third Elliott wave here in my favorite color, which is the yellow again, because this the right here, the TSTW24 trading system will give you either double green or a triple green signal. And if you know Elliott wave, also you know that you are in for a serious enjoyment, okay. And then we have the fourth Elliott wave, okay. I did this video many times, Some of those who are following us every day will be wondering what I'm doing again. The idea is that this is so important subject that we need to keep doing more and more video regarding the Elliott wave and the Fibonacci retracement and the Fibonacci projection, so ordinary traders are aware of the tools that are used in the market, so they do not get into trouble, okay, trying to get into the market in the wrong time. Very important. In my view is that when we have many people, high percentage of traders start being more, okay, educated, okay, knowing and understanding the key things in the market, the Elliott wave, the Fibonacci retracement, the Fibonacci projection. If you master these tools, okay, you are ahead of many traders, okay, and then together with the market pattern and understanding what is the signal and what is the entry point, okay, knowing that the signal is one thing but the entry point is the most important thing, adopting what I call the mindset of a professional trader, which means you will never ever place a trade without paying attention to the economy news and also checking carefully the risk-reward ratio before even thinking of taking the trade and avoiding what we call the over-trading, okay. So we have the fourth Elliott wave, which is here. I'll color it also red for you. As you can see again, the fourth Elliott wave in this particular case again has been divided into ABC, a corrective move. So I'm doing it again here. Oh, this one's moving, okay. So this is again another ABC corrective move. Like I said to you, the second Elliott wave and the fourth Elliott wave can, not always, okay, can, not always, can be divided into three small waves of ABC, and this is what has happened here, A, B, C, okay. And then we have the last Elliott wave, which is the fifth Elliott wave, from here to here, okay. Look at that. The fifth Elliott wave has brought the price into the 138% Fibonacci projection zone of this movement to the downside here, right there. It touched my yellow line right there and it turned around, okay. So the fifth Elliott wave, which is the last wave, I'll call it blue, which means we reach the sky now, okay. We reach the sky now. That's the fifth Elliott wave right there, okay. Now before we continue this video, because this is so important, and I don't mind spending time on this video so that traders, okay, ordinary traders, experienced traders that are struggling to count the wave, you can see clearly that what we want to see a downtrend, okay. There was a downtrend, which is, this is what I'm talking about, the place where the signal is taking place, the place where the first wave has started from. The first Elliott wave will start, okay, at the end of a downtrend, okay. And then here, boom, it brings out of the consolidation zone, retrace back. After we see the breakout of the consolidation zone, a beautiful bullish, okay. So the price will break a resistance and should run away, okay. It's not only to break it and retest the resistance level straight away, to break it and run away, which means breakout of resistance level, which is validation of the breakout, a breakout, huge volume, resistance being broken, and a bullish momentum must increase. This is how you locate what we call a valid, a bullish breakout. A valid bullish breakout is when the price perfectly break bullishly. You see this tall candle here, it doesn't mess around. This is telling you, I'm bullish, man, I'm standing here, do not mess up with me. We acknowledge that that's a bullish breakout, okay. But now after the bullish breakout, we see a huge volume, okay. If you have a volume indicator on your chart, some forex trader will have it. Those who are trading stock will have a volume on their chart, huge volume breakout of the resistance level, okay, plus increasing momentum. We want the price to break it and to run away, okay. It's like a rugby match or American ball. You take the ball from your opponent and you run with it. That's what they did here. They break it from the bear and the bulls took it away fast. They ran away with the ball. They ran away with the ball, okay, and they reached this level. And now you are waiting for the second Elliott wave. This is the most important thing if this uptrend will continue. Many traders get into trouble when they see the price retracing back because they know that the price is going up, okay. And a lot of traders, they don't understand how the market functions, okay. Now, have you ever seen anybody only breathing out, not breathing in, okay? Breathing out, you just breathing out, breathing out. No, the market breathe in and we breathe out, breathe in and breathe out, breathe in, breathe out, okay? So for an uptrend to be healthy, the market should pull back. Every day we see on the market, okay, on the hourly chart, on the 30-minute chart, on the 4-hour chart, people know that the uptrend has begun and people are just jumping into it, and they don't pay attention that yes, it's an uptrend, but the price can pull back. There's nothing wrong with that. A lot of traders are so desperate waiting for that pullback to come in so they can join also what I call the bullish party. That's why the second Elliott wave is so important. And you will see people will be buying like a mad. People here, wait for the pullback, wait for the pullback. Be patient and just wait for the pullback. If everybody is patient here, okay, this is about the psychology of the market. You can see here, you know, people were just pushing it. Even right here, the market decided to give the second wave here. People were just buying like a mad people. Okay? All right, nobody's mad, but this is what's happened. Okay, and they push it and they want to bring it down. They were buying. You see this tall candle here, bullish. It's like I mean, some of the big market controllers decided that to control this market now. They push it down. Okay, push it down. Okay, to kick a lot of people. I mean, some people who came in too late here. Okay, and then we have the second wave, and if because everybody want to join the third Elliott wave. Okay, everybody's waiting for the third Elliott wave, and that's it here. So this is about the psychology of the market. They at the end of the second Elliott wave, which will usually move, bring the price down up in the region of 61.8% Fibonacci, between 50% and 61.8% Fibonacci retracement level of the first Elliott wave right here. Okay, and if you want to master the subject of a Fibonacci retracement and Fibonacci projection, you need to go to www.dayprotraders.com. www.dayprotraders.com. This is regarding, okay, Fibonacci projection and Fibonacci retracement. Hot doors, okay, very, very, very serious matter, okay. And regarding the Elliott wave theory, you will promise me that you will go to www.24elliottwave.com, okay, www.digit4 elliottwave in plural.com. And for Fibonacci projection, Fibonacci retracement, and money management, okay, you go to www.dayprotraders.com. If you stay with these two websites, you will be able to understand and to use perfectly like professional trader the Elliott wave theory and also the Fibonacci retracement and the Fibonacci projection. And as you can see, the price pull back here and it gives us a beautiful third Elliott wave. That's where the money is. The third Elliott wave, that's where the money comes. That's where the fund manager comes to the market. That's where you will meet the hedge fund managers. If you want to know where are the smart money, what are they trying to do, check for the third Elliott wave. That's where they are. They are not interested in any other wave, okay? They are very, very serious about the third Elliott wave. You see how the price was going up? Nobody will dare to mess up this movement to the upside. Nobody, because it's well controlled by the smart money. They are not prepared to spend another 5 months waiting for another trend. That's it. Because you see, if you are business, okay, you have only 2 times half of the year. And this uptrend that has begun here in July, okay, it finished it exactly in November, okay. So July to November, okay. So July, August, okay, September, October, okay. Beginning of November, nearly 3 months or so, this uptrend is finished, okay. It's finished, okay. So 4 months altogether, this uptrend is finished. So if you are smart money, you have this opportunity once in a year. I mean, at least twice in a year. I mean, maximum twice in a year. Okay, that's it. So you don't want anybody to mess it up. That's what's happening. Okay, and they take their profit here, and we have the. And from this, the fourth Elliott wave, what I usually say to traders is that if you, this is the best place to day trade. Okay, do not try to swing trade in the fourth wave. Okay, I do not do that. Okay, I day trade instead because it's a messy environment. This is a late coming. As the price going down, okay, the smart money start, especially in the fifth Elliott wave. As the fifth Elliott wave is going up, the smart money start selling straight away because they know that the price should give now the ABC corrective move. The market is considered as overbought at the end of the fifth Elliott wave, but must be accepted as overbought before the price will give the corrective Elliott wave. If you have been watching our video before, you will know what I'm talking about. Considered overbought, yes, but must wait for the market to accept it as overbought level before you will see the ABC corrective move. If the price is rejected as overbought, even though considered as overbought, at the end of the fifth Elliott wave, in the case of the uptrend, the price can perfectly continue another 5 wave after displaying the 5 waves. Okay, so after the 5 Elliott wave, there is a high probability. It does not mean the price will definitely give the ABC corrective move. The price can perfectly start a new trend or consolidate it, okay, with me going into horizontal and then start a new trend again straight away. Okay, you will see that perfectly on a stock like Google or Apple, where the market just saying wow, wow, wow to the movement, okay, for the product, the service, okay, the excellency of the company. Okay, so right now, and then we are now in this session here this is the A corrective move, and this is the B corrective move, and this is the C corrective move. Okay, so we have now clearly, okay, the ABC corrective move after the 5 Elliott wave. The ABC corrective move will generally move the price down to the region of 50% Fibonacci, okay, retracement level of the whole uptrend. I hope you understand what I'm saying here. So this uptrend that has begun in July, okay, where I'm moving my cursor here all the way to November 2010, the ABC corrective move, because the market is considered as overbought at the end of the 5th Elliott wave. If the market accepts that level as overbought, the ABC corrective move must be given, and the ABC corrective move, which is a contra trend to the trend, because we have uptrend, the ABC corrective move will be a downtrend. Okay, so now you bring it down, and you usually bring the price down in the region of 50% Fibonacci retracement level of the whole uptrend. Okay, this is about the ABC corrective move. That's very, very important information, okay, that you need to remember and to pay attention to. Okay, now bear with me. I'm just going to clear some of the information on the screen. I hope everything will be okay. Now bear with me, please. One second, please. One second, please. That's it. Now, my apology for the noise coming out of the microphone now. My microphone a bit too close to the speaker now. Now, the uptrend that has begun from here all the way here, what we'll do, we will draw the Fibonacci retracement tool on this chart now. Okay, so from here all the way to the end of the trend, which is uptrend, we are expecting the ABC corrective move to bring the price in the region of 50% Fibonacci retracement level and the 61.8% Fibonacci retracement level. So this one here we expect. Okay, so at the end of the 5th Elliott wave, we were here. So at that point in time, we will draw our Fibonacci retracement tool on our chart, okay, and locate the key level 50% and 61.8%. That's what we want to locate clearly on our chart. And those are two lines, I will color them blue. Okay, so that's where we want the ABC corrective move to end up. Okay, somewhere in this band, this blue band here, we want the ABC corrective move to bring the price down to that zone. Okay, and you will see in most cases, you see how it bring the price there. It bring it all exactly there on the 61.8% Fibonacci retracement level of the whole uptrend. Okay, so after you locate the 5th Elliott wave, maybe you miss the whole trend, and suddenly you recognize that this is in fact ABC corrective move. Don't worry, pay attention to this zone of 61.8% Fibonacci retracement level of the whole uptrend, and the price went back up. If you look carefully below here, I have another line right below the 61.8% Fibonacci retracement level. That level is the 66% Fibonacci the 66% Fibonacci retracement level. Some professional trader will use 66%, and they are the people who push the price down to 66% because these are smart people. They bring it down to 66% Fibonacci, which is this white line, 66%, and the 61.8 is the blue one here, and the top one here, this is 50%. Now, talking about this is all about technical analysis, okay? And my approach to the market is that you must be a fundamental. You should be using also fundamental tool together with the technical analysis. As we are speaking right now today, on the 12th of January 2011, there are traders who are busy selling the euro right now because of the condition, the economic condition in Portugal right now. Even today, as I'm speaking today, Portugal will issue bonds to the market, and expecting to collect some money from the market. Maybe they are expecting to issue bond to the general market to collect money from the market. So the government of Portugal need money, and by doing that, the government will issue bond, okay? And if the smart money is not prepared to trust the government that they will pay back the money, they will not buy the bonds, okay? So this is a big test today for the Euro USD, and there are some important news coming up also today and also on Thursday, okay? So if you are trading using only technical analysis, not paying attention to the economy news, what is going on, you will be missing some opportunity, which we do not want. We want you to get all the opportunity. So when you are trading, the technical will not lie to you. It will tell you the reality of the market, but you want to also pay attention to the sentiment in the market. When we are talking about the sentiment, is the momentum, okay? Anytime you hear somebody talking about sentiment of the market, we are talking about the momentum in the market, okay? So this is about paying attention to the economy, which means we are using our eyes to look at the price, okay? But we use our ears, okay, to listen to the news, okay, to pay attention to the fundamental, what is the reality of the market, in order to adapt to what is going on, okay? If the market is hot, we will switch our temperature also high in harmony with the market. If the market is cold, we will switch our temperature down to be in harmony with the market. That's how you do it. But a lot of traders found that difficult because they want it the easy way. They want everything to be exactly the same music, the same dance, the same footstep every day. Yes, but if the music change, okay, you need also to change your steps. Otherwise, you will be out of tune, okay? And there are seasons for everything. So I hope this video, okay, you find this video useful, that you put it into practice in order to master once and for all this subject of Elliott wave and this subject of Fibonacci retracement and Fibonacci projection. I hope you did not get too bored with me with this long video. Please accept my apology if you feel that way. Until the next time, okay, enjoy yourself and be very happy. Thank you for watching, and speak to you soon.